Thursday, October 24th, 2019, Maneco 64, home of alternative economics and contrarian views. I've got my End of Fed mug here this morning. You can get one of these in my Teespring store below in the description or in the banners that YouTube provides if you want to help expose the fraudulent nature of the Federal Reserve, of the Working Group on Financial Markets, which includes the SEC, the CFTC. These people are not there to help Joe Public to regulate the markets. No, they're there to protect the bankers, and they're bought and paid for the bankers. And that's what I want to talk about today. I warned people in the crypto space a couple of months before it started, the Bitcoin futures back in 2017, December 2017. I warned that it would be a disaster for Bitcoin, for the market, not for the idea of cryptocurrencies, but for the market itself. I even did a video, which I'll put up in the cards. And it's quite amazing because I don't like to brag, but I said exactly that the CFTC and the SEC and the Treasury, they all work together to try to manipulate things. And this has actually just come out. And it's not a conspiracy theory. It's the former chairman of the CFTC, which regulates futures and options, Christopher Giancarlo. He admitted it earlier this week. Trump administration popped 2017 Bitcoin bubble. Ex-CFTC chair says, right? So we'll go through that article. More importantly, though, this morning as well, we've got Repogeddon. What's Repogeddon? Well, we've had this problem in the repo market, which is basically a pawn shop on Wall Street for all the major institutions, the too big to fail banks, right, that are primary dealers at the New York Fed. And they're not only US banks and also other institutions. They call it shadow banking, like hedge funds, mutual funds, private equity, whatever you want to call them. These people are not dealing with each other. They don't trust each other. There's something wrong out there. And we saw yesterday another announcement by the Federal Reserve, because the Federal Reserve has had to step in for over a month now to deal for these people, right? It's like you go to a market, outside market, and no one wants to deal with anyone. So like police or authorities from the local government come in and start dealing. So that's what's happening. So yesterday, yeah, Fed to increase repo market interventions again ahead of month end. So I'll quickly go through this. What do I think is happening here? Well, what I just said, financial institutions that are supposed to provide liquidity in the credit markets, right? Which drives Wall Street, which drives the economy. Don't forget, we're a debt-based system, and credit is the lifeblood of the system. If the credit dries up, the whole economy implodes, right? So what I think is happening here, to give an analogy, is that we're in a huge cinema, right? Very crowded. And I know most people now don't go to cinemas anymore, at least I don't. But the people who run the cinema know that there is a fire just started. And they're telling the people in the know, here, you need to be careful. That's the exit door over there, right? And this is what's happening here in this repo market, in my opinion. So let's go through here the story that came out yesterday. And it came out, the Fed announced this just about 45 to 30 minutes before the market closed. So the stock market edged higher on the back of this. It says, and this is from the FT, Federal Reserve surprised some traders. Well, it didn't surprise me. I think they're going to keep increasing this intervention on Wednesday by saying it would increase the amount of money. Wow. yeah, credit, I would say, created out of thin air. Where do they get that money? Do they go to the Klondike or South Africa to mine the gold? No. That's why you need to have physical gold and silver be outside of this system. It is injecting into overnight lending markets, seeking to avoid a repeat of the cash crunch that sent short-term borrowing rates soaring in September. Yeah, they went up to 10%. Beginning on Thursday or today, the Fed will increase the size of its overnight operations for the repurchase or repo market, where banks and investors borrow cash in exchange for treasuries and other high-quality collateral. The markets arm of the U.S. Central Bank said it would raise the limit on the amount of cash it will lend into the market to at least 120 billion, up from 75 billion it had previously agreed to supply on a daily basis. Well, and it also, this is just for the overnight repos that expire every day. They also boosted the amount for what they call longer term or term repos from 35 billion to 45 billion. So another 55 billion here from the Fed for the bankers. Where's the outrage, President Trump? Why? What's the Fed? Where's the criticism of the Fed here? I don't see any, right? Well, it's because President Trump is part of this cabal, right? People who think he's gonna end the Fed, and I have to say, I did think of that a year or two ago, that he would do that, but he's just playing the game, right? He wants to keep Deutsche Bank alive. Deutsche Bank is the biggest creditor to the Trump organization. Deutsche Bank is one of the primary dealers to the Fed. It's probably one of the banks that's in trouble. The other thing I would say that people don't talk about as well is the over-the-counter derivatives, which probably number up to over $1 quadrillion. What's a quadrillion? Well, it's over 1,000 trillion in notional amount. It's the instruments or like betting that almost brought down Wall Street in '08, right? Derivatives, and it's still out there. So, and it's off balance sheet, so no one really knows exactly how much they've got of this these bets. And talking about derivatives, let's go now to the CFTC. And this is not the first time the CFTC has and the government, U.S. government, have intervened to basically manipulate a market. And that's what they've done with Bitcoin. And I'm not making this up. The chairman of the CFTC at the time actually admitted it this week. What other time did they do that? Well, they did it in 1980 when the Hunt brothers cornered the silver market. And the Hunt brothers, they were not there just to make the money trading. They started buying silver futures in the early 70s after Nixon closed the gold window, and they were taking delivery of this physical. It was a threat to the dollar, the rising price of silver in 1980. It went all the way up to $50 in 1980, right? So what did the CFTC and the Fed and the government and the regulators do? Well, they basically banned people from buying the silver futures, and that just like killed the market, right? And bankrupted the Hunt brothers. So they've done it again to Bitcoin. Bitcoin was doing very well in 2017. It was a threat to the dollar. So let's read this article here. This is from CoinDesk. It says Trump administration popped 2017 Bitcoin bubble, ex-CFTC chair says. Oh yeah, and also make sure you listen to my video, which is up in the card and in the description. I made this video back in October 31st, 2017. So these futures started trading on December 17th, I think, or 18th, 2017. And I warned exactly what would happen to these futures and how it would impact the market, right? So let's go through the article. There's a lot of fallacies here spouted out by this guy, Christopher Giancarlo. So it says, the Trump administration acted to deflate the Bitcoin bubble of 2017 by allowing the introduction of futures products, a former official said Monday. Well, I would say if you look at the futures on Bitcoin, they're actually not real futures. They're just like bucket shop instruments. What do I mean by bucket shop? Oh, they're just like instruments to bet on the price, because there's no delivery of Bitcoin in these futures. Yeah, gold and silver futures, there is delivery. And granted, rarely does anyone take delivery there as well. So it's also a betting price mechanism, right? It might as well be non-deliverable, the precious metals future, right? But now they don't even care to make it deliverable anymore. They just make it like a bucket shop instrument, right? So it says, Christopher Giancarlo, who left the U.S. Commodity Futures Trading Commission, CFTC, at the end of his 5-year term as chairman in April, told CoinDesk in an interview, and I quote, "One of the untold stories of the past few years is that the CFTC, the Treasury, the SEC, and the National Economic Council director at the time, Gary Cohn, Goldman Sachs, that's the White House, that's the working group on financial markets, I bet you the Fed was involved as well, believed that the launch of Bitcoin futures would have the impact of popping the Bitcoin bubble, and it worked." These are some of the things he says here that are really dishonest, in my opinion. He says, without shorts, a market has no pessimists. And he quotes, if you do believe it's a ridiculous price, but you don't own, there's no way to express that view. Well, Mr. Giancarlo, if you don't own it, you have to buy it, right? And then sell it. It's just that you didn't get in on it, right? That's the problem, Mr. Giancarlo. A lot of people owned it, and they didn't think it was a ridiculous price. And if they did, they would have sold it. So this is his quote. If you don't have that derivative, then all you've got are believers, and it's a believer's market. That's rubbish, right? Basically what he's saying here, if you don't let the bankers manipulate the price, then you don't have a market, which is completely an oxymoron, right? You do have a market, Mr. Giancarlo. What you've done here is created a criminal market, basically, to allow the bankers and the government to basically manipulate the price lower. That's what they did. I remember there are a lot of people in the crypto sphere, in the Bitcoin sphere, that were saying that this would be good for Bitcoin. I said in my video, you can listen to it, that it defeated the purpose of decentralization, of Bitcoin being, and cryptocurrencies being outside this corrupt system. And there you go. They've admitted it. I mean, Mr. Giancarlo, if bubbles are so bad and you've got like what you call a ridiculous price, why don't you try to pop the stock market bubble, right? Because when your president took over in 2017, the Dow was at 17,000. Now we're almost at 27,000. Why don't you pop this bubble, right? So there you go. Real criminal activity by the people who are supposed to be overseeing the markets. So in the end of the day, CFTC, SEC, Federal Reserve, National Economic Council, whatever you want to call them, they're there to do the bankers' bidding, right? To keep the bubbles that they like going and squashing competition, just like they did with with the Hunt brothers in the early 80s. Don't forget, the Hunt brothers, their father was one of the richest men in America. He knew what going off the gold standard was going to do to the dollar. That's one of the reasons they started buying physical silver. And the powers that be saw that as a threat. and they saw Bitcoin as a threat as well. These are the same people who are now telling us that everything's fine, the economy is doing great, right? And don't worry, don't look at the repo market, just keep an eye on the Dow, right? So I say, I don't want to play these people's game. I want to be outside the system. How do I do that? Well, physical gold and silver, tangible goods, paying off debt, because having debt is playing a game with these people, right, that manipulate things. What about the markets? It's 20 past 8 a.m. London. If you can call them markets anymore, really, we know that these markets are all rigged, right? Mr. Giancarlo has admitted it, that they rigged the markets, the bankers, the Fed, the CFTC. Be as it may, let's have a look. Gold is $14.90 here, down $2. Range has been $14.88 to $14.93. Silver is down 2 cents at $17.52. And these are all quoted in Federal Reserve notes. That's why, when you buy gold or silver, think about how many ounces, grams you've got. Don't worry about the price so much. I know it's great to see that gold and silver are doing well. It's a signal that the system is in trouble, this corrupt fiat currency system, right? The Dow is up 40 points, 26,872. S&P is back above 3,000 thanks to the Fed pumping in more and more funny money yesterday, right, through the repo. It's at 3,010, up 6. S&P Nasdaq 100 future is up 38, or 0.5%. Sterling is up 0.17% at 129.34. Euro as well is up a quarter at 111.54, 0.25%. Dollar is unchanged against the yen at 108.70, and it's also unchanged against the Chinese yuan at 706.25. That's the other thing as well. All these fiat currencies, they're all sinking anyway versus gold and silver versus real money. Try to get out of them as much as possible wherever you may be around the world. National currencies, these paper currencies, fiat, central bank created currencies, they will be going to zero over the long term, in my opinion, and even Voltaire's opinion, right? Crude oil, fairly strong here. WTI is down a quarter, but now trading with a 55 handle. So we've gone up 2 handles in the last 2 days, 55.76. Brent is back almost to $61. Is at $60.82 here. What about the bond markets? Again, if you can call it a market, yeah, the yields have risen a little bit here. We're at 177 in the 10-year. The 2 years at 159. So there you go. Repogeddon, that's what it is. Beware. Try to avoid this system. Some people say, oh, how do you pay for things if you avoid the system? What I mean by that is try to have as little of your savings in the system. Of course, you're going to need dollars, these Federal Reserve notes, to function. But if you're lucky enough to have spare Federal Reserve notes, don't have it. Don't lend it to these people. Get rid of it for something that is not Federal Reserve note, that's not in this financial market. And certainly do not trade cryptocurrency futures. Have your own wallet. Buy your own real Bitcoin. Do not participate in these futures markets. Same thing for gold. Do not buy ETFs. ETFs are a contract as well. There's nothing behind ETFs, even though the prospectus says there is, right? Nothing behind COMEX gold futures. You need to have the physical. So there you go. If you enjoyed this video, make sure you hit the like button, share it far and wide as well. Subscribe to the channel if you haven't yet. And you can also follow me on Twitter, Steemit, and on DTube. I wish you all a great day. Take care. Bye.